Computer. Hi, everyone. This is the Huddlecast. Today is September 13th, and we're here with special guest Kara Haas, or on Twitter, Divide by 9. So thank you, Kara.
So great to be here. Thanks so much, Sasha.
We just did the Henry Rains show together last weekend, and now here we are in person at Block Spaces. So it's exciting time.
It is, and constant news developments. Everything that we plan on talking about just Saturday has changed, more information. It's great.
Mm-hmm. But the main thing I was excited about, Kara did a really deep dive into the Bitmain IPO rather. Get the lingo straight here.
Well, and articles refer to it as an ICO as well. So We'll talk about the differences.
Yeah. So that's the main topic, but we also have a few other fun things to discuss, some on the T0 and what else were we
over T0 and Overstock, maybe touch on some of the new stable coins coming out. A little bit more about accounting and reporting and how these different projects actually report cryptocurrency. Everybody tends to be worried about the tax implications because that impacts everyone, but sometimes we don't think about how to record the inventory of both the cryptocurrency or, in the case of Bitmain, their chips.
Oh, this is going to be a good one. I think Kara is a wealth of knowledge. Maybe can you start by giving everyone your educational background and kind of what you do for your career?
So accounting was a second career for me. I grew up in family business and studied Spanish and international affairs. And once I realized that you don't just apply to be the next diplomat to Mexico, I worked in family business where I learned accounting. With the old green ledgers, and then mentored by my family's CPA. And I was working toward my MBA and then decided I liked accounting so much. So I went back and got my master's degree in accounting. And I worked in public for quite a while for some smaller firms. I worked for the Chicago Mercantile Exchange for a short time, which was super exciting. It was right around September 11th. And then shortly thereafter, my family was in Florida, so I moved to Florida and worked for some smaller firms, did quite a bit of bookkeeping, tax. Then I really got heavy into the IT side and became an expert in point-of-sale solutions and payments. And of course, payments, I was always looking for the new thing. Got on board with PayPal and Dawala, and I think Dawala came to be right around the same time as Bitcoin. Right around 2009, 2011 is when some of the new electronic payments started to develop.
Sorry, what is Dawala?
Oh, Dawala. I'm sorry. I forget so many times of what people do know and what they don't. And it's an electronic person-to-person payment type system. It's very similar to PayPal. Okay. It was almost like the precursor to Bitcoin to a degree. I mean, there was, of course, a lot of different variants. They're still around. They've had a few problems here and there, but they're a startup from, not a startup anymore, but they started, I believe, in Des Moines, Iowa. Okay. And really works really well. I tried it with a bunch of my colleagues, my CPA friends. We kind of built a firm back in 2009 on Twitter. And I think it all started, one of us asked how to depreciate a cow or how to handle livestock. And about 6 or 7 of us started really becoming active on Twitter. And we met up at Zappos out in Vegas, and we all have our certain niche areas, and we've all stayed in touch. It's been great. It's really good as a sole practitioner to be able to have people to count on in different areas, and you know that with law. It's the same thing. So that's how I really got into the space. Continued to work in payments for a while. I read the Bitcoin white paper when it first came out, or Satoshi Nakamoto's paper. And then I went back to school for my doctoral degree in accounting at the University of Florida. And as I was preparing for that and applying to grad school, I kept bringing up I really wanted to research blockchain. And that was around 2014, 2015, and nobody really wanted me to do that. So I did go to school. I took some time off. I had a couple personal things come up that I had to take a couple years off. So I've been preoccupied or distracted in a good way by all the white papers and everything becoming mainstream. So it gave me quite a bit of time to really take in and learn build on what I've learned in the past. And I've really enjoyed it. So I get to use some of what I learned in research, but now I just really enjoy seeing some of the public company data that we have, especially after the second quarter of this year. So many more companies, I think just doing a quick search of disclosures, there's over 30 public companies that have some kind of Bitcoin cryptocurrency treatment on their books.
Mm-hmm. Oh, on their
on their tax, like their investor data with the SEC.
Okay.
So
is it now? Would it be like, I know there's a lot of people filing the Reg Ds with the SEC, but this is, you're saying different. They're like actual public companies filing
so this would be the public companies, like Overstock.
Mm-hmm.
Of course, they were one of the leaders in the space of accepting Bitcoin Square. They of course keep Bitcoin on their books. And then Riot Blockchain Inc. is one of the companies. They were a biotech firm, and back in the fall of 2017, they ended up doing a pivot, and one of the companies that put blockchain in their name, along with like Long Island Iced Tea or Long Island Blockchain,
mm-hmm.
and a couple of those companies,
Kodak.
Yes, and Kodak, and they changed from biotech to mining cryptocurrency. And they're an interesting case in particular because they are an actual registered public company, publicly traded. And so now we have audited financial statement data, which I have been so looking forward to, because when I first got into the space and reading white papers, and I'm dreaming about this transparency, and I'm so excited that, oh my gosh, I'm going to see all these financials. I can't wait. And of course, I don't think, unless you're a VC firm or it's a client of yours, nobody sees that mm-hmm. data for the most part. So having some public companies, I only read the things nobody else ever reads. Nobody reads the white papers. Nobody reads the notes or the disclosures on the financial statements. Everybody reads the numbers. I start with the notes and the disclosures. So I have most of these financials, half the time I can't even tell you the numbers off the top of my head ever, because I'm always interested in the words. And right now, the biggest issue for the industry and accountants in particular is the accounting treatment of cryptocurrency. So we have guidance from the IRS that it's property.
Yeah, such guidance.
Right. Well, it's like solid compared to what we have, of course, with the SEC and the CFTC and all the regulatory bodies still attempting to sort out what cryptocurrency is and its treatment. And then we have the Financial Accounting Standards Board, who gives accounting and reporting financial accountants, not tax. It gives us the guidance, and we don't have that guidance. So we typically look to the Big Four, who are usually the auditors. PwC, Deloitte was one of the big ones in the space, and one of the big leaders, one of the first that I started to follow in the early days. But PwC's come out, they all have, but theirs in particular, to really discuss right now, best practices is to treat it as an intangible asset, which I'm jumping ahead a bit with the Bitmain IPO.
But just, sorry, with that intangible asset, so what would some examples of other intangible assets be?
So that's a great question.
Like goodwill.
Goodwill, and goodwill has a really odd treatment, in fact, to the point now where they say goodwill and other intangible assets.
Okay.
Software,
Okay.
that's another big common one. It's obviously, or at least right now, it would be lovely if we could get it to be treated as cash, and that it could be as liquid as cash or cash equivalent.
What would stocks be treated like?
So they would be investments, but because it's not considered or recognized
Security.
as a financial instrument yet, they won't. Mm-hmm. And if it's a commodity, it's actually accounted for as inventory. So commodities are accounted for as inventory in both inventory and intangibles. So those are anything that don't have physical presence, and that's the best way, or the best equivalent is goodwill. Also, like data that companies collect. So some of these companies,
like
their
biggest
is
worth something.
Yes, and that's a really interesting thing in the space as well, or in accounting in general right now, is how do we value that data? Because so many companies, that's their main,
that is their business.
Exactly. So for valuation and acquisitions and things like that it's become interesting. But right now, best practices does say intangible. So with intangible assets and inventory, they get reported at historical cost. So whatever the cost of acquisition. So if you buy Bitcoin, it goes on at your purchase cost.
Or if you buy Bitcoin Cash for $900 a share,
right,
for $890 billion.
Oh, mercy, yes. Then it's only subject to impairment or devaluing. It's never subject to being written up. So
wait, and what would writing it up do? Like, if say, I am my own company and I bought Bitcoin at $100 and I can't ever write that up.
You can't.
That's awesome though, isn't it?
So it is, other than the fact that it's awesome for tax purposes, more or less.
Oh, but
it
doesn't. The company wants everyone to be like, look how rich in assets we are.
That's exactly it. It doesn't increase your assets.
Okay.
So if you bought one Bitcoin for $100, it stays on your books at $100. So you would prefer it to be sitting on your books at $6,200, or in the good days that we will come back to, we believe for sure, 20,000.
Would companies have any incentive then, if they had old assets that were valued low, to sell it and get a new cost basis at a higher price? Or
so they'd still have, so they would, but then of course you're dealing with tax treatment of how long you're holding the asset. So if you've had it for a year or longer. So there may be benefit to that, but in a way you're just trading assets. So you're trading your cash asset for your loss asset. Okay. So even if you go in to reacquire, you could accumulate more in that situation and then look to build up. But the biggest problem, that's where they'd like to go with it, is fair value treatment.
And is that what a stock would get?
And it's like mark to market, and then the debate would come, how often do we reevaluate these assets? Right, exactly.
Second least.
but we know she. And I think what happens too is, at least to start out with, when you report. So if you could revalue, which would be really interesting with the market and market manipulation, all companies are reporting at the same time, month ends, quarter ends. It would be quite interesting to see how that would go. But at the moment, so Riot Blockchain, I'm starting to study them more because they actually are reporting using fair value. And they mine, which mining is interesting as well because
maybe they think it makes it a commodity because they're mining it?
Well,
or does commodity get fair value?
So commodity gets inventory.
Okay.
The main incentive right now for anyone to report fair value treatment, well, in the bear market, maybe not so much, but you have that opportunity to look more profitable. So in particular, if whatever they mined early, if they mined at, say, cost of like $6,000, well, that's a bad, what is it? No, more like 4,500, right? I think we determined the cost. So at 4,500, and they would be able to write that up and report, and they would actually have a stronger balance sheet. The other benefit to categorizing it or treating it as a fair value asset is there's a little bit more liberty on being able to capitalize your computing, your electricity, your not so much labor, but the resources that go into that asset. When it's an intangible asset.
Oh, wait, could you say I spend $4,500 to mine this thing, plus it's worth $6,000, so the whole thing is worth $10,500?
No, but I bet somebody would like to do that for sure, or they would try for it. Yes, they definitely, they certainly would love to do that. But what they would do, the answer is kind of, what they would do is they would take that difference and it becomes a gain. And that's good for public companies because then you have the revenue.
So it would be a $1,500 gain at $4,500 cost, $6,000 price?
Exactly.
Okay.
Yes. So whenever you get that fair value treatment, that difference, you have either recognized or unrecognized gain, and that boosts your equity and your balance sheet. For sure. So that's where I think everyone's attempting to push and lobby. And of course, the issue, as we know, and you know in particular in law, is maybe not all the tokens get the same treatment. If it's a utility token versus if it's a security token, compared to Bitcoin. But I think still, even though we like the fact that it's considered a commodity at the moment, and at least we have some definition there, we still would prefer it not be treated as inventory if possible. We just like some more leeway with reporting, I think. But really the main thing is deciding on something, and I know we don't want to rush to it, but the issue with everybody reporting different, and Riot is one that I really do like to follow what's happening, because the SEC has sent a comment letter. And usually when the SEC sends a comment letter, they're saying, we would prefer you to report best practices, say, as an intangible asset. And then there'll be communication with the auditors and management that they're making their case that it would be a hardship, or it would distort their financials and be more misleading if they were to report it anything other than fair value. So that's kind of what happens right now, is people are just making their arguments for it. But why we really need to arrive at a decision is the comparability. That's what we really need on when you want to look at whether you want to invest in two different mining stocks, mining companies. If one treats what they have as intangible and one treats them as if it's fair value method, you don't have that consistency or comparability. So that's why we, as auditors and those working in accounting and reporting for the investing public, really struggle with the lack of guidance. And we do our best. Management, we work with the companies, and that's where I do a lot of reading of the disclosures to see how they're indicating to people what they're writing in their disclosures, why they've selected the appropriate treatment, how much is there, what the risk is. So it's consistency and comparability.
Mm-hmm. Oh, that's fascinating. I never even thought about it from that reporting side yet. So there's so many different angles of this thing.
There really are. There just are so many, and so much of it has gotten lost. And I'm just super excited this year in particular because there's just so many more examples. And I'm so thankful. I mean, I know we beat each other up in the space. I mean, everybody does. I mean, you really do have to be willing to put yourself out there and accept some criticism and things. But my hats go off to everybody willing to participate and watch this evolve. I mean, it's so similar to watching the EOS block producer voting. It is people willing to play this out and see how it works in the space. Of course, it's a whole different ballgame under the SEC's purview. I realize it's quite riskier. So I really am grateful for the people with the examples.
Well, the SEC, I think, is trying to take a pretty measured approach with it. I mean, the people that are getting fines or sent to jail might not agree, but the ones that have had that happen have all been outright scammers. The people that have just been trying to do their best as good actors, I don't think the SEC has come down really hard on any of them yet. So, I think, and from different things Jay Clayton has said here and there, and the Hinman speech, like, I think they are trying to take a intelligent approach to it and not criminalize. They could have come out years ago and said, oh, this is all not allowed, and where would we be then? So
it's so true, and I think that's why patience is truly a virtue in the space. But I think everybody, and now we're looking at a global scale, we're looking at a global market, so the issue becomes trying to meld and have comparability and consistency on a global scale. And I know no one wants to rush. And the goal, just like with the law, we do have a lot of things in place that a lot of regulation that actually is applicable. So, and same is true for the standards. I mean, I think some of the accounting standards really do possibly need to evolve or be rewritten. We run into it even with non-crypto and the issues of reporting, but they don't want to hurry it.
Yeah. So what do you think would be the best treatment, the fair market value?
I think the fair value. And I think almost if there's a way that we could agree on potentially
global
different
standard of it.
Oh, for sure. That would be fantastic. But even if just US GAAP could even perhaps, and this is where it is, where does it all kind of hinges on the SEC and what they say. Before we can write an accounting standard to it. But as they move together and work together, that we could potentially have different treatment, whether if it's a utility token, and particularly I think in some cases, it really is going to have to evolve into inventory, particularly those businesses like say ATMs. I can't see it being anything else, or even mining. If you're mining for sale, then potentially that we could have some sort of intangible inventory treatment versus if you're holding it similar to what you would cash, or a cash equivalent or a stock or an investment. In that case, I think fair value would definitely be the way to go. The intangible method, just it's too restrictive.
Yeah, especially having this old number when crypto is so dynamic in its price.
Exactly. For sure.
Okay, well that was
so much for an introduction, right? Part 2.
Yeah. So maybe give us a little background on, you did a great job explaining it on the Henry Rain show, the Bitmain IPO. You've done a real deep dive into this.
So, and it just continues to evolve. So Bitmain is the predominant Bitcoin ASIC. Is it? I mess. Yeah, ASIC. I mess up what all the acronyms stand for all the time.
There's a bunch right over there.
Oh, perfect. we can have a little cheat.
Can you see it on the
Oh,
yeah.
There we go.
Anyway, I don't know if those are ASIC or what, but
they could be GPU. But Bitmain, they have been known for their ASIC chip production and their distribution of it, and they also own two of the most dominant Bitcoin mining pools, BTC.com, I believe, and Ant Pool.
Yeah, I've heard of the Ant Pool.
So they have, and then they also are invested in one other one, begins with a B. You can't keep track of all the names in the space, and even some of the employees where they head and different developers. It's definitely hard to keep track of all of them. But
now, have you heard of, like, people talk badly about these ASIC things, and I've heard Asic Resistance talked about as a really positive thing. Do you know anything about that? I don't really.
So I don't know as much, of course, as I would love to know about it, but I've always heard of it spoken in Monero context, in context of Monero, that they always want to fight the ASIC, and I think
they're hostile, like the ASIC people, like they'll take over so no one else can. I don't want, I'll sound so silly talking about it.
But maybe there will be some really good people that will definitely come explain to us that side of it. And I agree. I mean, that's
in the Raven white paper, they said it too, like as if ASICs are bad, they want to get the whole system running before the ASICs come in.
And the one thing, the key differentiator between ASIC and GPU, I think with the ASIC, you have to pick one coin, and that's all you can mine. And then with the GPU, you can mine multiple.
Okay.
And I think with the ASIC miners, especially with Bitmain, they can control the hash because they have so much computing power.
Oh, okay.
And so,
okay.
Sorry. Henry taught me to say it with confidence, so
yeah.
I'll go ahead and it'll be in the Twitterverse. I welcome people to correct my understanding of ASIC versus GPU. For sure, I definitely do, because there's just so much more you want to learn, because you come across these things, and it makes a difference from whether it's law or it's accounting, and that's what makes it fun, but also never ending.
Yeah.
You don't sleep. So there's always something to learn with it. But I think that's a lot of it, and in particular with Bitcoin and Bitcoin Cash, similar to and I could be wrong on this too, but like with Ethereum and Ethereum Classic, and that potential for a 51% takeover or a hack where more than 50% have control, I think that's the case with Bitcoin and Bitcoin Cash, is that they can use the same chip, an ASIC miner, to mine it. So that I'm not 100% sure on if that be the case with Bitcoin and Bitcoin Cash, but I'm fairly certain, because Bitcoin Cash is like 38% more efficient mining that than Bitcoin itself. But there is a lot of trade-off. I believe the GPU miners are a little bit cheaper and easier to produce as well. And then, of course, they can be repurposed. Where I think once you have an ASIC miner that you have mined Bitcoin, you can't repurpose it to Litecoin or Dash. I think you need a Litecoin or Dash miner. And is
that what Bitmain sells? Like they'll sell each flavor of miners?
That's exactly what they do.
Okay.
And their Litecoin miner, I think, and maybe even their Dash, they're currently selling at
Huge discounts.
huge, like over 100% loss. And there's a couple caveats to it. Number one, just to go back to the main reason of me being here as an accountant, is this information that we have on Bitmain is all what someone wants us to have. So it's not been audited. It's not been presented to any regulatory body that we know of. It was essentially put out there on Twitter, and then through various sources. And there are a couple analysts. A.B. Bernstein is one who I saw. They actually took multiple reports and kind of cross-referenced. And I think that's what a lot of the financial journalists who have done some type of analysis and presented us with the balance sheet, but this is information that somebody specifically put out there. Same is true with any of these financials in an unregulated market. You're getting what someone wants you to know. Mm-hmm. So that's where we have to look at it through that lens. And not necessarily, but everybody really does have an agenda.
But if they're doing an IPO, don't they have to get audited financials before they're listed?
So that's what's particularly interesting when it comes with if they're going to be listed in China in Hong Kong or Singapore or I can't think of a couple of the other competing markets, and I would probably not do justice to the pronunciation. But if you're not going to be listed on a U.S. market, then it's not it's PwC China doing the audit, which is not under U.S. regulation.
And have they been known to be a trustworthy auditor?
So they really haven't. It is the issue, because here's what's happened historically with Chinese companies, and not some of the bigger ones, but typically, like, say, Alibaba. Those aren't the ones that I'm referencing at the moment, but more some of the other Chinese companies, particularly from like 2006 to 2011, there was a huge movement where to get listed on a Chinese or the U.S. exchange, these companies would do a Chinese reverse merger. And what happens with that is a Chinese company finds a U.S. company that's already gone through SEC approval and has been listed and failed.
Would a pink sheet company suffice?
A pink sheet company, I believe, would. I don't know what the cutoff is, and I'm not very strong on the
tiers.
The
I think
tiers.
It's just their assets on their balance sheet puts them down into the pink sheet.
So
it's like
I think
million or
and like
200 million maybe. It's like the small cap, micro cap.
Exactly.
The difference.
So I think they would. I definitely think they would. As long as they were. Now that might have changed now, but at the time for sure, because there were over 400 Chinese companies that came and got on the U.S. exchange during that time. And what happens is you take a company. Well, let me use one of the ones in particular that was very popular. I think it was like L&L mining, coal mining companies, and some of the energy and agricultural companies that were failed, but they were still listed, or they were failing. And I think there was another one like Orient Paper maybe, but the Chinese company will buy that U.S., it's a shell company. Mm-hmm. And then they don't even have to inform the SEC they're going to do that. Like normally when you file, I think you have to file like S4, some kind of form to say we want to do this. The way it was done is they would just buy the company, change the name, and here we are.
You'd think you would need, because the SEC requires, even just on the Reg D, which is way less reporting, you still need to know the name of the owners and their address. So you'd think that when a Chinese company would come in and buy an American company that's actually listed, they would have to do something like update, this person's name and address.
So I think they do it right on the 8K. Like right when they go to change it, that's the filing. Like, here's our financials, guess what? Here's our new board of directors.
Or they could be a LLC that buys it. Like, so they could come form a Delaware LLC and then buy the company with the LLC or something like that. Yeah. Okay.
And the main thing with those type, and they call them CRMs, Chinese reverse mergers. The main thing with that is the company in China stays private. It's not public. So the only public company is what's in the US. And then if you have a dual listed, so if you have like, I guess in this case you would say Alibaba. I don't follow them, so I don't want to overgeneralize the rules on this, so I could be speaking out of turn. But if you have auditors auditing in the US, so if you have PwC or Deloitte, US is different from if they're auditing the Chinese counterpart, because there's a law in China where no auditors can, none of that information of like a state-owned enterprise, none of that can leave China. So it's essentially proprietary. And the public company accounting oversight board in the US, the one who brought us Sarbanes-Oxley and all the additional reporting requirements that make everybody love auditors. Not that we didn't love us enough already, but all these additional reporting requirements don't happen. Deloitte over there, China, doesn't have to respond to this. So the Chinese auditors for any of the public firms overseas, they don't have to report. They're not under US jurisdiction. So now you have a situation where, again, people are only sharing with you the information they want you to have.
And what was, this is a little off topic, I don't know, the shadow banking from China? Like, wasn't there, I remember seeing something a couple years ago that there was a big portion of debt that the Chinese government was hiding from the rest of the world, and someone uncovered it, and it was like a really big kind of scandal on the integrity of their any documents coming out of China were thought to be, have gone through a washing process by the government before being shown.
And I think that is quite common, and it would be interesting to see how much of this is related, because what happened in the period, I think today there might be like 100 Chinese companies listed that way. And at the time though, I mean, the New York Stock Exchange and NASDAQ, I mean, the American exchanges, they delisted a majority of these, yes. And while they prosecuted a lot, and there were some, I think there was only one CEO that served any time and went to jail. And that still mergers and reverse takeovers where you have that opportunity to buy a private company can turn public essentially by taking over majority control. It's still a scenario, but not as popular, because the biggest issue at the time, there was a ton of fraud. And actually there's a documentary that was done this year. It just came out, and I just had the opportunity to watch it just as I was reading so much of this information and the difference between Chinese GAAP and international standards and
just
US.
In case someone doesn't know what GAAP is.
Oh, sorry. Yes. Generally accepted accounting principles. So in the US, we go by US GAAP for accounting and reporting, and that's the same for any public companies, similar to what most of us would think on a personal level of tax basis or tax treatment. To us, as investors, we're reading financial statements and making decisions and doing analysis based on US GAAP. Mm-hmm. And then China has their own generally accepted accounting principles. I think they've evolved into like Chinese accounting standards, but it's still we typically actually do refer to it as Chinese GAAP. And then there's and I'm going to mess up the acronym, and it's horrible that I'm an accountant and to know it, but it's IFRS. I think it's International Financial Reporting Standard. That's the global. Okay. It's what everybody else uses. Mm-hmm. And China and the U.S. have done
what
some.
About Canada, I think they're on U.S. GAAP.
I think Canada's on U.S. GAAP too, because so much of what the American Institute of CPAs puts out is in tandem with the mm-hmm. Canadian chartered accountants. So I think they report on US GAAP as well. Mm-hmm. And I think so much of, it's jumping so far ahead. I don't even know that, I'm not convinced that the Bitmain IPO will happen.
Because they're not going to want to disclose everything.
Well, that's it. Why do
you think they are doing it in China anyway, or Hong Kong? Why not do it in America?
So a lot less regulation mm-hmm. is definitely why I think that they would do it in Hong Kong. And nobody, I'm probably the first to float this. I certainly didn't hear anybody suggest that they would try to get listed in the U.S.
Oh, yeah.
But I'm not going there. There we go. Right. So, Bitmain, there's your lead.
Yeah.
But I just, the reason that I brought all this together in my own research is because it has so many striking similarities, is that now you've got this unregulated market. It really is not at all all the information that's going around. You're just trusting whatever source you got it from. But with Bitmain, I think that it makes sense for them to do it in Hong Kong or one of the Asian-based exchanges. That I think it'll do a lot for that market, and if they do pull it off, and they do actually do an IPO, I think it in essence, to a degree, will do a lot for the cryptocurrency space as well. Just kind of some momentum. Mm-hmm. Their incentive.
And it'll be kind of interesting to see the appetite of the regular, like, this is something that, all the people that don't want to get messed up with, getting a wallet and dealing with crypto, they can just buy a stock that they're comfortable with buying. Mind you, how do they get it on the Hong Kong exchange? But it's still the Chinese investors that don't want to bother with crypto can get it there.
Oh, for sure, that they mm-hmm. definitely can. And it's the first where I think, like you said, that the demand for it, will there be global demand?
If they're successful, then watch, we'll have 10 more prop up in America. Like, we're IPOing as well.
For sure. Or like the countries to be most inclusive of and
Gibraltar's stock exchange will get developed. Malta is like not just a crypto exchange. Now they'll be the hub of the stock market too. Yeah, right.
Oh, for sure. And they and the incentive right now, or why people are thinking that Bitmain really why it makes sense for them, or why they're attempting to do one. Number one, they do need cash. Based on the information that we do have, we're going to trust the data that we do have, that they are going to need to be raising cash.
And why is that? Because they might have a little extra inventory on hand.
Yes, and two types. So that's something that we started to talk about on the show. They have a huge cryptocurrency inventory. So they have a really big inventory of Bitcoin Cash. They had a fairly decent size. I can't remember any of the numbers off the top of my head, but
I think it was, so at the beginning of Q1 2018, it was valued at 890 million or billion, I forget. And it was like 7% of the overall Bitcoin Cash. And they had sold their actual Bitcoin to buy it at $900 per coin, which now is worth like less.
Right. I didn't even look today, but the last time I looked, it was somewhere 450.
Yeah,
I think.
Yeah. So it's gone down like 50% in a couple months. But also, interestingly, I saw that they generate most of their revenue was supposedly from mining equipment sales, not from actually mining. But the equipment sales have been terrible this past 2 quarters, so they're sitting on all kinds of equipment that they can't unload.
That's exactly it. Mm-hmm. And that's their other inventory. And going back to some of what we talked about in the beginning, both of those things are subject to write-down, to impairment, to that Bitcoin Cash should be valued at whatever it is now. And if for some reason next quarter it went up, too bad, how sad.
So with the intangible inventory, it would be valued at 890 million, and that would stay on their balance sheet forever, even if it's really only worth 440 million or billion, whichever. Big difference.
It would just continue to write down. So if it kept going down,
the intangible inventory can go down. It just can't go up.
It can't go up. Okay. That's exactly it. That's the main thing. So in this
case, it works because the value's been
going down, and it would just continue to go down. They want it to stay up so that they have, because their cash was tied up in that, because they clearly did. I think, like you said, that at most they got out of the hard fork. It was a small amount.
Mm-hmm. And I think they tried to mislead people in a way to say that was, they were holding it because they had so much Bitcoin that when the fork happened, they got that much. But then one of the Blockstream developers dug into it and found that they looked on the blockchain and found they made huge purchases where they sold big chunks of Bitcoin and bought big chunks of Bitcoin Cash.
For sure. And most of the data that I saw, that corroborates that as well. And the other issue that they have with their actual chip inventory is that, number one, TSCM, Taiwan Semiconductor, that's the chip foundry, like who makes, I don't know all the parts to it, but Bitmain does the assembly and the distribution, and then they do the mining. But they require a 50% deposit, which if Bitcoin's management, if they keep mismanaging cash, I would expect that Taiwan Semiconductor is going to require a full payment. And I've seen where even analysts recommend that they do that.
Okay.
That we want all our money up front if we're going to manufacture these chips.
Yeah.
And their problem is that their lead designer left in like 2016, I think, to start his own company. That's a competitor. And I think it's surfaced that it's a viable. I don't know now if there's two individuals that have left Bitmain to compete. But the most recent competitor I saw come up today is ByteWe, if I'm pronouncing that right. I'm not sure. But
it'd be pretty hard to compete with them because they pretty much own the market. So you'd need they've got an economy of scale with production, don't they?
Well, that's what's interesting is they've failed. They've attempted to introduce 3 new products, and they haven't made it. Like they've failed. So they're still working off old equipment. So there's a lack of innovation. for Bitmain at the moment.
Oh, and if the new people have better equipment, then all that inventory is never going to get sold.
Exactly.
Ooh.
So the demand for that inventory, if that goes down, and then the impact on the mining pools would be interesting too, in the composition of the mining pool. So the revenue that they report, I shouldn't conflate these ideas here, but the inventory of those chips, so you're exactly right, that's subject to write down. So if they become worthless or they can't, that's why they're selling at such a loss. Get them off their books, generate cash, as much cash as they can, and force their competition out of the space. Because if you're like, it's race to the bottom essentially at the moment, that's their philosophy on it. But so now they've got their cryptocurrency inventory devalued and written down. They've got their chip inventory devalued.
Well, one thing too, though, I was so focused in reading the articles at the Bitcoin Cash purchases, I didn't notice how much Bitcoin they're holding. Like, what if they have more Bitcoin than they do Bitcoin Cash? Then they're still going to be okay.
They definitely don't.
Okay.
And I don't know the exact percent, but their largest holding for sure is
Bitcoin Cash.
Bitcoin Cash, like to the tune of 1 million, I think, Bitcoin Cash. And then I'm with you. Maybe 74,000 around there, I think, of Bitcoin.
Okay.
So
way different. Like
much different.
Less than.
Yes.
Okay.
So quite an extreme difference there. And then a lot of people think, well, if they own the mining pools, they've gotten out of the mining farms, but the mining pools, then why don't they just mine their own Bitcoin?
Yeah.
And that's where I think a lot of people thought that some of this would come into play. But clearly, when you look at the numbers and you look at the blockchain itself, they're using their cash to purchase it, and that you can tell their mining revenue from their own mining was down considerably.
Like 3% of their whole revenue.
Yes, it was so.
Which is really weird, because why can't they just pick up mining? They've got all those equipment, just turn them on and
start mining. Yeah. And I think what it is the cost to mine
is more.
I mean, you look at Bitcoin Cash, you could, at this point, if you want more, I mean, obviously at the time, and I'm with you, it maybe didn't necessarily make sense.
They should just pack it all up to places with cheap energy and go use all that up. Like, they're silly if they're just sitting there on inventory without a lot of. Well, I guess they're not silly. They're trying to get billions of dollars through an IPO, which is probably a lot easier than packing mining equipment up and going and actually doing mining places.
Well, between selling off what they
can't sell after you've used it, yeah.
Well, and if they can unload their inventory and they can do an IPO or even get another round of funding from.
Didn't they get? It's in our notes here how much they got. Where is it? So they earned $2.5 billion in revenue in 2017, $1.1 billion in first quarter, raised $400 million from venture capital, and they were valued at $12 billion.
$12 billion.
That's a lot.
And they're definitely planning. The projection for the IPO is to be bigger than Facebook.
Yeah.
I think like 16 billion maybe.
I think I read
20.
18, and that it was going to come in the top 5 ever. For that exchange between Facebook and Alibaba.
And they definitely could. And I think there's also some pressure, and I would suspect Sequoia Capital is one of the leaders of the funding. So I would suspect there's some pressure from early investors
saying
that this is the exit time. That they also have that, and then they have Canon Creative, and possibly I think there's been rumor of eBang that they may IPO, and then if they can do an IPO before them, it's no different than like Amazon, WhatsApp, any of the the first anybody to market in this situation gets the main pool. So I think that's the first to IPO in this situation, and we're going to see the same thing with exchanges too.
You think the exchanges will IPO?
I think so. So Robinhood's talking about it, and I think just in recent day, and of course Coinbase has talked about it since 2017 on and off, and they all keep trying to go for regulated acquisitions so they can move toward it. But Robinhood's made a step in that direction, and then I just caught an article, and I've already forgot who somebody else in the space, but I think we will see an exchange race to IPO as well coming. With Bitmain, I'm not so sure. So they were going to do it this month. In September is what it was rumored, and it's not unusual for that to take a bit more time. But what's been most interesting is they had said in their pre-round funding, like an additional round to get ready for the IPO, that SoftBank, Japan's SoftBank, and then Tencent, which is a major player in pre-IPO funding. They are a Chinese company that, and I think they might have just bought Quartz. I mix up all the mergers and acquisitions, but they would be someone that you would say, oh, this is real, this is happening. But more and more people are now pressure testing that, and Tencent and SoftBank are denying it or not making a comment. And what's interesting right now is Bitmain's not really coming out and either trying to walk it back, clean it up, say we've had other types of conversations. So there hasn't been much news out of Bitmain per se, but now there's been more news out of competitors. So the Byte Week came out today. Of course, Creative Cannon, I mean, they're so far behind them in market share, but if they can launch a successful IPO, it's going to make a big difference. So if it does happen, they really have to get some strong management in. Somebody, because it's not unlike any cryptocurrency. I mean, the things that we've seen Bitmain do, I mean, any of us that are in the space, Q1 of 2018, we all loved life, and everybody believed that they were invincible. So, and Bitmain has been a big one on Bitcoin Cash from the get-go. I mean, ever since the hard fork, they were a big proponent. They definitely have spent a lot of time promoting it.
Funny thing is, over there in Asia or Japan, and so I don't know if it correlates to Hong Kong, but I heard an interview with Christian Moss on the Art on the Blockchain podcast, and he was saying that Roger Ver is over there all the time doing meetups, and everyone's using Bitcoin Cash there, and he can barely even find Bitcoin to, like, no one cares. Everyone thinks Bitcoin Cash is the real Bitcoin over in China.
That's interesting.
Yeah, so maybe that's they wouldn't see it as a horrible thing that is the inventory.
That's another good point. That they may have to spend a lot of time doing that type of marketing too. If they own 1 million, I can't remember the total supply of Bitcoin Cash, but I mean, it's a fairly decent amount that they own.
I think it was like 7% of the supply, whatever the.
Yep. So they're going to have to promote it, but that's interesting because obviously they are successful,
at convincing people.
And that's so much the cultural differences and things that are lost in translation or just in what they view is a good investment. But they're going to have to get an innovator. And maybe they do have a strong designer waiting in the wings. I've seen minimal talk, but some talk of working on some AI products I think Sofon or something like that, to try to compete with NVIDIA. I don't think that's a good call at this point. I think they ought to stick with what they do best and work in the cryptocurrency mining and try to.
What are they going to do with AI?
Oh my gosh, I don't even want to, like, they cannot even begin to come up against, and a lot of people took the whole NVIDIA not reporting a lot in the cryptocurrency space as a down for, or a negative on Bitcoin. And it's, to me, it's really not. They are the AI game as far as I'm concerned. So that's where they really want their focus. Yeah, as long as we can produce a couple of these Asic chips for a while and ride the train, that's fine. But they're moving on to their innovation is really in AI. And I don't think Bitmain's going to compete there. I think they should stick with mining and just work on designing
best miner.
Some kind
They've already
of.
got. They're
they
right
really
there.
do.
They just need to
enhance what they have. So it will be interesting to see who's first of the big miners. I mean, there are some. They're not ASIC chip producers, and some mining companies out of Canada. Actually, there's a couple. Hive.
My dad invests in Hive.
Yeah,
He loves them. Yeah.
Oh, nice.
I don't know how much I should talk about it, but he did really well. Like, he has this. It's like a side story. My dad's really funny. He lives on this little like area of Canada in Antigonish, and he used to be a stockbroker in the late 80s, and something happened with this Australian mining company. Like, he was working for CIBC Wood Gundy as an investment advisor, but CIBC didn't want to touch anything under 5 million. So my dad started underwriting some of these mining companies on the side himself. Very ballsy of him, I guess.
Yeah. Risk taker.
Yes,
nice risk taker.
And then this Australian company, they got in a lawsuit. They sued him for like $100 million. He won, but it took 12 years in court, and it was like just a big, drawn out nonsense kind of thing. So he bought a pub in Antigonish, and he's just been managing that ever since. And he does his own trading at home, and he, because of my involvement in Bitcoin, he found Hive and kept telling me about it. He's like, I got one. And he's so excited.
That's so awesome.
Last Christmas, I guess he made like, I don't know what percent, not as much as if he had just bought Bitcoin, but he did well on it, so he was really happy.
And they were one of the first that really went on the Toronto Stock Exchange, right? And then Hut 8, I think, is and I mixed some of them up, but I got equally as excited as your dad, just because I'm like, somebody gets reporting numbers. Like, there's numbers I can read, and I could read them before US numbers even. But that this would be obviously one of the big chip distributors plus miner and owning the mining pools. But it is definitely an interesting space to watch and see what happens. But somebody's going to do it. I mean, and it does make sense, I think, for it to be Bitmain if they can pull it off. But everybody's young. And I don't mean even necessarily age, but just experience. All of us are young and experienced in this market altogether. So then when you take somebody who has no experience in the business or financial markets, they just have a tendency to do things that probably wasn't the best move. And so the winner of the IPO and the first to market may be the one who follows the existing rules best.
Yeah. And probably needs someone in there who's taken companies to IPO before and walked through the steps.
I'm thinking that they probably have started to get some people. I mean, they've tried to do a couple. I saw a couple articles where somebody had a tweet that, the CFO was Wu was upset with the CFO.
I saw that too. Yeah, because what did the CFO do? He made it 60 days instead of 90 days. Yeah.
So he would have had time to, they would have had 60 days to rework the numbers.
Yeah.
That I just thought, oh, well, I mean, if you can find a couple things that way. But I think at this point, probably there's some talk with Tencent and SoftBank and some of the major players of just saying, this is how it's going to go down. If you want to IPO, here's what's going to happen, would be my guess.
Well, and they might be able to do it. They might execute if they're doing that.
I think so too. Like if they just actually go back to innovating on a chip and we'll get the paperwork in order and then we can go.
Yeah.
And I think that's just what we see in so many of the innovative companies in the US right now too, is stop playing with the price in the stock. Let the underwriters and do what you do on the product and we'll handle the rest.
Cool.
Yeah.
Well, should we talk? We had talked about some of the other. Do you want to just maybe go over the Overstock news too?
Oh, so what's interesting with Overstock is, again, they were one of the leaders in the space. I think the first public company to accept Bitcoin as payment, and they also, in the past couple of years, I think maybe since 2014, they have their own tokenized security platform called T0. And they have, I don't know the exact pronunciation, Medici Ventures or Medici.
I think
Ventures,
you said it right.
Medici Ventures. Medici. So that's what owns the interest in T0. And they did a token sale. They did it, I think, a Reg D.
Yeah, they did Reg D.
Reg D.
I don't know if I should say it, but like I used a lot of their documents as guidance because it was like the most comprehensive filing there.
It was like 250 pages, right?
Like insane. But it was like every time something new went on there, it was like the way I guess you like to read the numbers. For me, that was the fun thing to read.
Oh, for sure. Yeah, it definitely is, just to see what language people are using because and where they put things. But I started to read that. And then I found an attorney who did a fantastic job and covered it. And I'm like, okay, perfect. For a while, I really loved reading a white paper a day for sport. But I'm kind of past that now. But what they ended up doing, the market cooled after they finished that initial. And they had authorized, I think, 5 million additional or 15 million. They had definitely authorized an additional sale. But they owned, I think, 70 or 80%. Medici, which Overstock owned them. And so they essentially bought their own tokens in the Reg D. It is really what I read it as. So, of course, like Bitmain or anybody else in the space, you need cash and you need money. So what are you going to do? So they went and got, they made an agreement with GSR Capital, which is, I think they're in Singapore, definitely Asian private equity firm. And they're mainly involved in the automotive battery space. So the parallel to blockchain, I'm not really sure. Most of their investments have been in automotive, and they were going to buy a division of Nissan. That Nissan, they were going to spin off their battery business, and I think it was for. If when you do play in this space, you mix up million and billion. I'm going to go with $1 billion. I mean, $1 million, anybody could cover that, right? I guess. So $1 billion deal with Nissan fell through. And they had been working on that with GSR for over a year. But Nissan said, no, we're not going to sell to you because we don't think that you can come through with all the capital. And
they said that to T0 or to
they said that to GSR Capital. Okay. So GSR had like a couple smaller, they had one in a failed automotive battery business. And then they also got into a partnership with some Turkish partners. And we all know what happened with the Turkish lira and everything lately. I mean, if you've got exposure in Turkey right now, it's probably not the best investment. It's going to hurt sales. They just raised their rates this morning. I saw 24%. So we freak out over like 0.25 raising rates. Yeah, 24% raise on the lira, the Turkish lira. So that was their, that's what they had going on, but they probably had some cash and some capital that they were attempting to build up in order to make this acquisition from Nissan. So Overstock T0 got them to sign a term agreement for all the tokens, and then 10% of Overstock shares. Okay. So now GSR would own, and I don't think it's gone through, and you would know for sure better than me, like they said it was like a term agreement, which I think it's legal. It's not necessarily legally binding, but that it's going to happen. I mean, that's usually what I think they put together. If they want to announce, they obviously wanted to announce for earnings. Mm-hmm. But
that term sheet, I think, just like
that's what it is.
You put just what the terms are going to be, but it's not written in the 200-page document with all the different legalese things in it. It's usually just like, you're buying this many shares. You know, it's really clear what it is.
That's what it is.
That's what everyone should just have for everything, just sign the term sheet.
Exactly. Nobody reads anything else except for me anyway. Yeah. So just send it to Kara. She'll read it. So they had that. I haven't heard. They really ought to have that go through before third quarter, or they're going to be in trouble, because Patrick Byrne, the CEO of Overstock, and he's had his run-ins with Wall Street multiple times, and I know that he's definitely seen as a leader in the space, and he has a lot of followers.
I'm holding back my question for fear of sounding ignorant, but what were his run-ins with Wall Street about?
So they had a couple. I think it was definitely over the retail arm. It was definitely before Medici, and I would have to go back and look, but I know accounting treatment that they definitely had some issues with that, and then there was some
with
pump and dump with Overstock.
Okay.
And then pump and dump schemes on the internet that
with Overstock.
Okay.
With
Overstock for sure. And then what would happen is, I mean, it wouldn't be a direct link. Mm-hmm. But that there was quite a bit of alleged. I'm not sure how much of it ever came to fruition. But they definitely had creative reporting. I mean, and a lot of innovative companies do. But they definitely had a couple different lawsuits, and I'm not very well versed on them.
I'm gonna look. I'll look
for sure. Them, yeah, and I can even send you over a couple. Okay. It's one of those things you want to read about or get caught up. During the time, it was probably around 2009 to 2011, I want to say, and right around the time that Groupon was big. And I was in retail, but I was all about Groupon. And so I was chasing Groupon and trying to save my retailers from doing Groupons, because, I mean, it was like cannibalism. And so I definitely was big on chasing and giving Andrew Mason a hard time, and the Groupon gang that I neglected Overstock. So that's why I'm not that well up to speed. But now that they've kind of crossed back into another interest, I've been following them. And what I thought was most interesting, if they couldn't put this together by third quarter and turn it around, because Overstock itself has had issues with marketing and coming up against Wayfair. And they claim that they've had all kinds of trouble with Google's algorithm, and they've cleaned that up. But they spent a ton last quarter on marketing. Their marketing expenses went up a lot. So if they can't put on a good show for third quarter, they need to come up with something. And 2 days ago, I think it was, the CEO filed that he was going to sell 10% of his holdings. And so that to me tells me that there's probably some issues with enough funding coming in from all the term sheets. And they were smart. They did it in 3 different term sheets so that it's better to get some, if not all.
What 10% is he selling though? Because if you're saying he bought the security tokens and he's selling those,
overstock. He's selling 10% of his overstock shares, and that he's going to turn around and invest it in Medici Ventures, who's also invested in other blockchain projects. But the T0, that platform will be a trading platform for securities, and they trade a tokenized version of overstock on it. It's not liquid. It's not liquid at all. But I mean, it functions like in beta, I guess. And then they've got competitors in the space, though. I mean, one in particular that's caught my attention in the past. I haven't spent a lot of time on them yet. Is Polymath, but they look to be impressive. So a lot of it. I mean, what they have going for them, the benefit, they're all regulated. They're in the regulated space. I know that they have partnerships and dealings with Symbiont, or I don't know if that's, but a couple of the bigger names. So they're definitely well connected. But again, it's like anybody else in the space at this moment. Your competitors maybe have been working behind the scenes, and all they may be lacking is regulation, or lacking the announcement. Then you're in trouble. And I think we're going to start to see a lot of that in the 4th quarter.
Yeah.
It's just my sense. I could be totally wrong, but.
What do you think that'll do if we start seeing problems with them for the overall like Bitcoin price? Do you think it'll have any impact?
I don't think it does.
I don't think so either. I think all this other stuff is just kind of noise, and Bitcoin is its own thing. That
I agree. A lot of people are
honey badger don't care.
Yeah, exactly. It's honey badger. And I agree. I think most people feel that way too, and everybody just wants to point to it. And he did in his letter announcing it to shareholders that no matter how many times he tells people that Bitcoin has nothing to do with their share price. Well, it really doesn't. But the fact that both went down, he almost wants to point to it like that's why we're down. You're not down because of that. I mean,
well, it could just be sentiment. If like people are so, I don't want to call everyone stupid, but people are like, oh, here's a Bitcoin play, let me buy this. Oh, Bitcoin's down, let me sell this, or people actually using overstock now that Bitcoin's cheap, maybe don't want to part with it, but when Bitcoin was at 20 grand, they're happy to go buy a rug on overstock, where now they just want to buy it on Amazon.
Exactly.
But I started noticing actually all overstock stuff is sold on Amazon now, or like just recently I started noticing when I do Amazon searches, stuff that was from overstock is showing up on the search. So
that's interesting. And I think that might have been some of their strategy, because they definitely are still working to save the retail business. But that might be the best way that they can do it too. I mean, they're claiming that sales are up and that this is going to be one of the best quarters ever. I mean, that's what it said in his letter, but
we'll see.
And he's quite poetic in his writing.
Have you seen him speak before?
I have not, but I heard he's a phenomenal speaker.
He got me like ready to. I wanted some T0 after listening to him in Miami.
That's what Henry told me too from the radio show. Like every time I would be like, "Oh, I'm a little skeptical about this, Henry," and he's like, "But have you heard him speak?" I mean, and it's true. It's like Bill Clinton. I mean, at the end of Bill Clinton, I'm believing hope and change, with no question. I mean, that man sells me. You whatever his message is, that you're just like, I want it. So I, that's what I've heard, but I have yet to hear him speak. But everybody says that he is a good speaker. Yeah. Maybe not the best business manager. Same thing, with Bitmain. Good miner. Maybe not the best at picking what cryptocurrency to buy.
Yeah. Oh, that's interesting. So much great information, Kara. Thank you.
Thank you. Oh my gosh, it's been so much fun.
Yeah.
I'm just thrilled. I appreciate the opportunity to talk about accounting, like the whole podcast. I hope people didn't hit stop 10 minutes on, but
if they did, I learned a lot, and I'm sure there might not be that many of us that interested in the accounting of it, but I'm sure people should be. So hopefully you made it to this far.
Create some awareness. Yeah, I really do. And if anybody does want to chat more, obviously I'm excited about it. And I long for conversations. Sasha, you're great sport on Twitter to put up with a lot of my accounting tweets. But really,
they're great. You gotta follow her at Divide by 9.
Divide by 9.
Yeah. And I know I'm hoping to get you to evaluate one of my clients' books, but is that something like any of the viewers could, like, what do you work on?
My main specialties are financial statement audit, and I have a post coming. It's got to come soon about the different levels of audit and the different types of audit, but financial statement audits, particularly for people who are getting like a money service business license, or if maybe not even necessarily crypto, but going for a loan.
I have 2 people who were applying for that New York BIT license that
okay. Yes, where I would do, as long as, it's independent financial statement audit. I practice in Florida, but I certainly could, team up with, other accountants that would need, but that's exactly the type of work that I would do. Compliance audit, like I'm a fraud examiner, so I also work in like the AML and the know your customer area. And then too, like just advisory. If a company doesn't know the proper accounting treatment or what they should, I love to do research, and so people will contact me. And I'm finally really starting to look at what we're calling the liquidity trap, or trapped liquidity. Some of the high risk businesses like online gaming and cannabis, cryptocurrency is a great alternative, but can you get that converted legally? How do you disentangle it so to be able to convert that to fiat
without having to go to Mexico?
Exactly. Yeah, right. With for sure, without having to cross borders. And it's an interesting place to navigate right now, because you've got different state regulations. With the gaming, you've got New Jersey, who's far ahead of the pack, and Delaware and Nevada, that you've got things that work there, and same with cannabis, and the different state regulations, but then you've got the federal, so that's something that I'm working to. I used to work a little bit in the payment industry, so it just kind of makes sense to try to help navigate that too. So those are some of my primary areas, and I'd love to move into starting to move into the valuation market as well. Particularly in the early days, I loved starting to value these platforms. So being able to couple that with business valuations is exciting.
Yeah. Oh, I think I'm excited to have someone to work with. Like,
me too.
Things.
Definitely. Well, I'm excited that somebody cares or needs the information. So it's been a dream. It's been great meeting you, because and everybody at Block Spaces. People awesome. They do. I mean, they really are appreciating that there's more to it than just tax. And that we have someone. I do anything but tax is really. Anything you need an accountant for that's not tax is me. And we have so many great people at Block Spaces that are involved in the tax market. So
shout out to Peter.
Yeah, Peter.
Yeah.
So
all right. Well,
wonderful.
Thank you.
Definitely. Thank you.
End it now, I guess.
All right.
Oh, sure. But in case people weren't watching, I put a SpaceX Occupy Mars cup that Kara gave me as a gift before the show. Really, thank you.
Oh, definitely, for sure.
Kind of like, can you tell them or?
Oh, certainly. So I do some contract work for NASA in their retail operations and food services and employee services. And so I spend a lot of time with the retail. And so I'm able to get some of the exciting NASA and SpaceX material. So
Cool. It's fun. I'm excited about it.
Definitely.
All right. Bye.
Bye.